All right, here we go. Weekly Roundup, December 10th, 2021. Counting down to Christmas.
Yeah. Are you ready?
15 days. I am pretty ready, actually.
I
Got
remember.
just about all the gifts, and you're more of a last minute, right?
Well, I remember you saying in sometime like July you were ready for Christmas. But then when I spoke with your wife, she said that's not actually true.
Well, my part was ready. The one gift I have to buy, 75 she needs to buy. It's a different story, but it's classic.
Yes.
Yeah. So in bigger news, the
Yeah.
big news of the day, I got my COVID test back because I've been sick all week and negative on that. So I don't have COVID, but I've clearly passed my cold on to you at the office this week
Yep.
because you're now a little under the weather. So sorry about that, bud.
It's all right. We're getting our immune system strengthened back up.
That's what I'm saying.
That's
What
it.
I'm saying.
Yeah.
Shouldn't be trying to avoid these viruses. We should be running towards them, right?
Yes.
I don't know what I'm talking about. Okay, let's get started with what was the week like this week
Yeah. So
in the markets?
well, today was, I think, that big inflation number that everyone was waiting for. We get a giant 6.8% inflation, biggest number in 40 years. It seems like everyone's running towards that and talking about that. So that's grabbed, I think, a lot of the attention of kind of the newsy type things. Lots going on kind of underneath the surface. Last couple of weeks, I talked a little bit about, I think energy is probably starting to peak. And in fact, I think last Friday, I said, I think that energy trade's probably pretty close to being done. So I've tried to remove as much exposure to anything energy related in portfolios. So, throughout the year, this year, we've owned XLE, MLP, we've owned Russia, we've owned Saudi Arabia. Like all those holdings are out of the portfolio now. So I think that was kind of a theme that kind of was realized last week. Energy bounced around here, but I'm not super optimistic that it's going to go much higher. So I think with this big inflation number, this is probably the biggest one we'll see, and the rate of change probably slows. If you look at the statistics, though, and one of these things that people like to say, though, is inflation is going to be higher, and I think that's the case. It is. Long run inflation's been below 2 for a long time. And the next couple of years, if you look at forecasts, we probably get a 6 this year and a 3.5 and a 3 or something along those level for the next couple of years. So yes, probably inflation runs at a higher level, but the direction of it is what stock prices care about. And so I'd say that's one of the things that's primarily happened from a news perspective this week.
Gotcha. And then you mentioned, taking energy out of the portfolios. Anything else material in the portfolios this week?
Yeah, so similar as we start to transition. I mean, we talked a little, I think last week, we tried to adapt to that growth and inflation narrative. And so it looks like we're heading towards kind of a short-term Q1, quad one and Q1, which is growth accelerating, inflation slowing. And so we haven't had that, I think, since we've been doing these calls. I don't remember a quad one in a long time. So with that as kind of the backdrop, that is kind of yield curve flattening. So intuitively, that's not good for the banks or the financials, because banks borrow on the short end and they lend on the long end, and Canada and US have slightly different metrics because of the way their lending practices work. But particularly in the US, heavy borrowing on the short end and lending on the long end. And if that curve flattens, the profit gets taken out of the financials. So have reduced a lot of exposure to financials, still potentially have a little bit in portfolios, but have primarily been moving away from that. And continue to look at trimming that part of the portfolio.
Does that mean we've hit just about all the quads this year?
We
We
will.
just tickled quad 4. We tickled
Yes,
quad 4. We didn't get
we
right into
did
it.
tickle quad 4 in the US and Canada. In China, we definitely got into quad 4, and one of the charts I'll show is where it looks like China is probably in a really good place over the next 6-9 months, as they were in quad 4 for a while. But yes, in North America, we tickled it briefly. And it does look like we probably get a mild one in Q2 of next year. Depends how quickly the central bank tightens.
Gotcha.
Yeah.
Okay. Are you ready to get into Ben's charts, or we got something
Sure.
else ahead of that?
Sure. No, let's do it.
All right. It's everybody's favorite segment. That's what they tell us anyway.
It is.
As always, let us know if you have any questions in the bar down below. Just hit the Q&A button, and we will ask those questions.
So I gotta start off with an inflation chart, of course. So this was Juliette Declercq had put this out. She's a research individual out of France. She's very interesting. She's on Macro Voices quite often, but she put this out with kind of the longer term view, right? Inflation's always and everywhere a monetary phenomenon, Milton Friedman. So it's really the reference that, this printing of money is what causes inflation. And if we look at this kind of shows you the backdrop of, the dark line is how much monetary policy is expanding. And then the orange line is the PMI manufacturing output prices. So, as the monetary expansion tightens quite quickly, if we look into here, the likelihood is I'm not saying it goes here tomorrow, but the likelihood is we see that inflation number start to slow. And so I think that's, one of the things that I say, yes, this is what stock prices care about, what's happening in front of us, not what's happening immediately or behind us. So interesting look that central bank's balance sheet expand, we get inflation, it shrinks, we get deflation. So from a simplistic perspective, that's how I look at that one. Makes sense? Yeah.
Yep. Yeah.
So this was put out by Lynn Alden today. This is an interesting view that, again, consumer prices and the federal funds rate. This is the kind of the biggest divide between federal funds rate and CPI, which is more inflation metrics. And the reason this is relevant as well, we had a similar setup to this kind of in the 40s. So interesting to look at some of these historical events where we had big periods of contraction followed by expansion, inflationary numbers, pretty wide divergence, but it's important to sense like we're in kind of uncharted territory as you look at these charts. And, this is really why inflation seems to be this narrative that people continue to talk about so frequently. Makes sense?
Gotcha. Yep.
This is a China chart. So very simple to read, I'm sure. But
may as well be in China. May as well be in Chinese.
So
walk us through it.
And probably, a couple times this year we've talked about China. I think I started to reference it February, March of this year. It looked like it was peaking. I sold out of KWeb, which is our exposure through the Chinese internet companies. Probably peaked in the 70s. Now it's down somewhere in the 40s, high 30s, low 40s. That was a view where China kind of overextended. And then they went into this tightening phase earlier. Their economy contracted earlier, and they've been in kind of a quad 4 slowing economic backdrop for probably 2 quarters now. And so as we look at what's ahead for them, it looks like, this is Darius's piece. So he's saying growth should find a bottom in mid Q1. So, the important thing to remember when you look at this is you say, well, I should wait to buy it until then. But the market tends to look at forward guidance, right? So the market tends to lead the economy from this perspective. So, if we're bottoming in mid Q1, then maybe we're bottoming in stock prices already. Evergrande has officially defaulted on their bonds. Looks like all of this stuff is working through the system. China has cut interest rates now this last week. And so maybe it is bottoming here, and it's probably offering some pretty good value. So something I'm considering. You'd asked me a couple of times, when are you going to buy China again? It's something that certainly one of the top of mind places I'm looking for from an opportunistic perspective.
Gotcha.
Sense?
Yeah. Oh,
Or do you want to go back? I went with four.
that's,
I went with four. Went with four.
4 charts. Wow, I don't know.
Yes. Yeah. So this is so I mean, I follow this from a perspective of what are institutions doing, trying to meet their objectives. There's all these pensions in the world that end up managing a big chunk of the money that's in capital markets, either in stocks, bonds, private equity, things like that. One of the biggest challenges almost all of these pensions have is they have these defined targets of return that they say they're going to deliver on. And so, 2 weeks ago, we saw CalPERS, which is one of the largest pensions in the world. Their board approved them allowing 30% leverage in their portfolio. So, they look at their portfolio and say, we just can't generate a 6% rate of return for portfolios. So we're going to put leverage on top of that in order to get that 6% number. So the reason I put up this slide today is it does show you, this is what the pensions look like in 1960, essentially 100% bonds in their portfolio. So simple for an actuary to look at it and say, hey, we're going to buy these bonds, we're going to lock it in at 8% and go to sleep. And essentially risk-free investing. And now if we look at that number, the bond allocations in these pensions look like, that number is probably somewhere around 25%. So you've moved from this level to where we are now, which has increased the risk within the market dramatically, so that you get, pensions trying to meet obligations. So they're taking more risk with stocks. They're adding leverage on top of their positions and taking more risk. It just shows you kind of how skewed we've become in the last kind of 50, 60 years to pushing people out the risk curve. And so that adds a lot more volatility and kind of unrest in the markets, and something that's very important to pay attention to. But each week we talk about crypto for a reason too. It's almost a $3 trillion asset class now, because there's things people are trying to do. We need to get to rate of return numbers to get you to your goals. And there's kind of alternative assets coming out because, this landscape has changed so dramatically in the last kind of 50 years.
Sure. Well, that's a good one. You saved the best one for last.
That's it.
You typically do.
Try to, yes.
Mine. Yeah, that one's a surprise. Yeah. Wow.
Yeah.
Okay, well, that concludes Ben's charts.
That's it.
Looking forward to next week, which takes us through the middle of the week, middle of the month.
Yeah.
What are you looking at for next week?
Yeah, so right now we were kind of talking before we started recording here about this kind of takeover event that's happening in Vegas this week. It's Real Visions putting on a blockchain crypto event, and that started yesterday. Will go through till Sunday, I believe. So there's going to be some interesting reading and data to look through there. These are kind of the best and brightest minds of digital and crypto. One of the things I saw coming out of there this week, they had I think the CEO of the digital crypto Chamber of Commerce. And so I'm sure you've been a part of a Chamber of Commerce, but they have this global digital Chamber of Commerce that's developed around the whole kind of crypto strategy that's happening. Is super interesting. So there's lots to dive into and read and look through on that over the weekend. But from a macro perspective, it looks like the market's looking a little bit fragile. The one chart which I didn't put up, which I meant to today was the NASDAQ chart that shows the divergence between, the top 5 companies and then the remainder of the NASDAQ. And so the top 5 companies are driving almost exclusively all of the returns for the NASDAQ this year. The other remaining companies within the NASDAQ would all be kind of negative year to date. So, be interesting to see how that evolves and pushes higher, because, you look at these levels continue to be elevated. And so I'd be watching that and be looking to add to bonds if there's an opportunity here, add to some kind of good longer term positions, and with potential market shake. So watching it pretty closely, and the closer we get to Christmas Day, the more kind of volatile the markets could be, because there's less people trading them, so volumes start to fall. So certainly be watching that as we close in here.
Gotcha.
Yeah.
We should make a pact right now that next year we go to the takeover, the crypto takeover, and we live stream from there.
Oh yeah, that
Wouldn't
sounds
that be
good.
cool?
That sounds
Hey?
good. Yes,
Should live stream from there next year. Vegas, you and I.
sounds like a plan.
Everybody heard it here. I made you commit. You're taking me to Vegas.
That sounds
Merry
good.
Christmas.
Exactly.
All right. Anything you want to close with? Any more info you want to?
I'd say from the last thing, as we work through gains and losses right now, I'm going through clients' accounts, seeing what the gains are like. If there is some external gains or losses that you've taken at other places, certainly let me know. Drop me a note, give me a call, send me an email. If there's anything else, if you sold a property somewhere too and you got a big gain and you want me to realize more losses to help with that gain, certainly drop us a note, let us know. Otherwise, we'll continuing to be working through that as we get closer to Christmas here. That's it.
Sure. Awesome. Okay. Well, no questions right now. Let me just double check. And yeah, that's it. Okay. Well, everyone, have a great weekend, and we'll see you next week.
Take care. Thanks.
See you then.